Uh, March 15th, 2024. You can see on bar one, we got a failed breakout of yesterday's low. And if you look at the Globex session, the Globex low was about right here. And we got a failed breakout of it. And bulls attempted to get a bull bar closing on its high. If one was a bull bar closing on its high, probably 40% chance that it's the low of the day on the low of bar one, considering the fact that, it's a failed breakout of the Globex low, it's a failed breakout of the low of the day. To gap down, it would have been a big bull bar closing near its high. And, the potential expanding triangle. So this is a really crude drawing, but you get the point, potential expanding triangle. So I thought if one closed on its high, reasonable chance that it was the low of the day. However, when it did not close on its high, traders got disappointed, right? If you bought front running one, hoping it was going to close on its high and be the low of the day and maybe try to test somewhere up here, you're disappointed in the big tail. And so when traders saw that, they ended up exiting their longs, causing two. Inside bar two, potential high of the day. Better to wait for follow through. Probably sellers above, probably buyers not too far below. And you get a big outside down bar on three. Three closes on its low, but a huge tail and a lot of overlap with two. You need a really good follow through bar on four. You want four to be, something like this, basically closing on its low. If you're gonna take a swing like this, you want to see huge follow through, and you don't get it. Instead, I don't even think they got quite to the 50% pullback, but yeah, they didn't even get there. But no one really wanted to sell below three. If it was so bearish on three, then why was there just a doji bar on four? So anyone who sold below three is going to be disappointed in four, and they're going to use five to buy back their shorts. Six, it's a low one short for the bears, but it's really not very good. Bears see a breakout pullback from three, but it's just three straight dojis in a tight trading range, so expect breakouts to fail. Some follow through for the bears on seven. It does close below the breakout point of the four low, which is good for the bears, but it just looks like a forming wedge, and we end up getting a wedge 1, 4, 7, and 8 is an overshoot of the channel line. So we get an overshoot on 8, a reversal up after a couple legs down. So I think a pretty reasonable buy above 8 for a swing. You can see the bulls who did take the buy, maybe they're going for 2-to-1 of their risk. And that's roughly where we got to up here, which is, 2-to-1 is about the high of the day, which is not a coincidence. That's, it's how it's planned out by the algorithms. Big follow through for the bulls on 9. Good bar, but a tail on the top. Probably always in long, I would say. Any bear who was short is going to exit above 8, and then both got follow through. So we're probably always in long on the close of bar 9. Disappointing follow through on 10, but we end up getting buyers below and a second leg up 11. It's outside up on 11. But not an overly strong close. So a little bit difficult to be buying above 11. And you get bad follow through on 12. You're also right near the moving average, so it's really not as good as it could be. 13, a bear bar. It's an inside bar. It's a lower high for the bears, double top. And the bears want essentially trigger on 13 and get a big follow through bar, and then maybe go for some sort of measure move down based on the height of the double top, maybe somewhere down here. But instead, bulls know that other bulls are going to exit below 13 and that bears might sell. So they buy the close of 13, trying not to let it trigger. And you can see that's what caused the big bull move on 14. However, tail on the top, maybe not as good as it could be. This is troubling. So, if you're buying above 8, you're expecting 2 legs sideways to up. It could have been 1, pullback 2, and you're willing to exit here. Instead, you're getting follow through. The thing that's troubling is for bulls, it's really hard to find a spot to buy because all these bars have big tails on them. And so it's really hard to just pick a bar and buy above it because you're being conservative that this could be a trading range open. I'd imagine we went past the halfway point. Okay, so this is interesting. So any buy the close bar, right? Let's say you buy the close of this bar right here. There's a 60% chance it's going to get back to your entry price, and an 80% chance if you buy above this bar and you add more above a bull bar closing your high, that you're going to be able to get out around break even. And you can see the bulls, so they bought this close and they added on at the 8 high. And look where 16 goes. 16 goes right to that midpoint. So they buy here, they add more above here, and they're able to get out. And that's what's starting to cause the selling here on 16. 17, bear bar closing near its low. It's a low 2. The low 1 was, bar 11, but we got a much deeper pullback. You could argue it's essentially a low 1. But, in trading ranges, it's more okay to trade against tight channels. The channel from 8 to 16 was really strong. But so was, this channel was relatively tight too. And this channel was tight, and then we still got this big move down. So, the whole day ended up being really kind of 1, 2, 3, 4 expanding triangle-esque. Tried to form a 5th point up top, but we were not able to towards the end of the day. But the market was trying to rally. But 17 closing near its low, it's a low too. It's an okay swing short. You can see on 18, any bear bull who bought this close was disappointed in this. And so they used the tail on 18 as it was rallying to get out. And that's what caused a lot of the selling. Pair of bear bars, 17, 18. More follow through on 19 for the Bears. It's not very good, but it's 3 straight bear bars. And generally, you do not want to get a 3-bar pullback. Usually, especially in a spot like this, 1 bar is what you want as a pullback. 2 bars is not ideal, but acceptable. And once you get 3 bars, bulls probably aren't going to buy again if you get another bull bar. So what ends up happening is they bull see 19 and they just dump their shorts or dump their longs at the market. And that's what causes the bear bar 20. Inside bar low 1, short 21. But this is probably a minor reversal. It's 5 straight bear bars, so it's okay to sell, okay to be short. But after 2 legs up, or 2, this how tight this channel was, I'm expecting another leg up. But we could get a pretty deep pullback. Follow through on 22, but I don't think this is going a lot lower. We're around the bottom of the most recent buy climax, which was the 14 low. So there's going to be buyers there, and that's what ended up happening. 25, some bears taking profits. Some bears taking profits 20, 23. You can see you sell 22, you're disappointed 23. You get out, that causes the bounce on 24. 25, a low 1, closing near its low. I think it's a reasonable swing sell. So the obvious problem with it is you're selling in the middle of a trading range, right? And also you're selling around the open of the day on a trading range day. You're selling in the middle of the trading range. So that's basically exactly the middle. So that's, one of the big problems with 25. However, it's harder to take these sells because you have to have such a wide stop. And so the probability is not as good as you want it to be since you're in the middle of a trading range and you have to risk a lot. So it's really not that great. And that's one of the reasons why traders started taking profits when we got this pullback. However, 25, you don't have to risk very much. You can just put a stop right above 24. So the risk isn't all that huge, especially compared to this. And you might end up getting a tight channel on the second leg down. So it's an okay swing sell below 25 because, you're taking a chance that you're getting 2 to 1 of your true risk or of your risk. Maybe you're going to go somewhere down here. But if you get down here, you're probably going to break out of the opening 18-bar range as well. So you can see we ended up doing that as well. A lot of times the market, Al likes to say, it gets in a mood of doing things. And we've had a lot of failed breakouts of the 18-bar range this week. And essentially midday reversals essentially was another failed breakout of the 18-bar range. So we've had 2 or 3 failed breakouts of the 18. This was 2. So we've had a couple, basically 4 failed breakouts of the 18-bar range this week. So not all that surprising that we ended up getting another one. Oops. If you look for patterns early in the week, if you're getting a lot of double tops, double bottoms, a lot of wedges early in the week, look for those patterns to continue. We ended up getting a lot of midday reversals, failed breakouts of the 18-bar range this week. So 25, a credible swing sell. Follow through 26 is basically a doji bar. It's not that great for either side, but if you sold 25, you sold it for a swing. So it's okay to sit through some uncertainty, as most swings have uncertainty in the beginning. 27, more follow through for the bulls, and a big bear bar closing near its low 28. It's a bit climactic. We're probably going to get a pullback pretty soon. You're on a bear channel line. You're also around the high of bar 8. So, bar 8 is a swing point in the market, especially in trading range days, tries to test swing points. So you can see we test that during 28 and got some profit taking 29. An inside bar on 30 and a follow through inside bar, or following inside bar on 31 as well. It could be a third push down in a trading range, but I still thought the premise of we're going to break out to the downside of the 18-bar range was valid. And it's still always in short and technically consecutive bear bars. So I think a reasonable sell below 31 for a swing. You have to keep in mind, you're going to get out above any bull bar, and this could be a final flag. So you very well might get stopped out here. Follow through on 32 is small, but it's still follow through. And so traders start to enter again, causing 33. Doji follow through 34. It could be 3 pushes down, 1, pull back 2, pull back 3. And there's probably not too much left to this move. So we start to get some profit taking. 34 or 35, trades above 34, trying to, look for bad stops basically. 36, a bear bar closing near its low, an inside bar, but really not all that great. I think, your best case is we're going down here and you end up getting, basically this giant bounce. Traders sell it. Traders were selling above this, willing to scale in. And, the higher up this goes, the better their risk reward gets to this low. 37, a bull bar or bear bar closing near its low, but it's really just a doji bar. It's just really just a giant doji. No one wants to sell below. We get buyers below 38, but tight trading range. So not really that good. If you were to buy above 38, you'd be buying the top of a tight trading range after a tight channel down. So it's really not as good as it could be. 39 closing near its low, but still tight trading range. And then you get 40 and 41. And I don't think you can sell 41. I think if you're selling, you're a couple legs down in a trading range. You're very deep in this bear trend. and you just broke out of the 18 bar range and you're trying to get a breakout below this tight trading range. The tight trading range is final flag. So if you're selling down here, you're selling a breakout of below a final flag deep in a bear trend, and you're hoping that this breakout of the 18 bar range gets followed through. So it's really difficult to want to sell here. Anyone who sells 41 is disappointed in 42. You can see they use 43 to exit exactly at break even. That's what caused the bounce. Anyone who sits through 42 sees 43 and they think, well, this is just not what I wanted. If you sold 41, you wanted 42 to look like 41. You wanted 43 to look like 41, and instead you're getting bad follow through. So what do traders do when they see this? They just hit, flatten, exit at the market, and that's what causes such a big bounce on 44. 44, a midday reversal, probably going to get back to the open of the day at some point since it is a trading range day. You can see we got there during 55. So I think reasonable swing buy above 44. It's a big bar, and we're pretty, the channel down from 17 to 42 is pretty tight, and it's a big bar, big risk. So we might end up getting a 50% pullback of 44 and find buyers there. This was not one of the times where that happened, but definitely can get a 50% pullback there sometimes. Bad follow through on 45, just a doji bar, but relatively expected when you have a big bar and big risk. You can see we touched the 39 high, which is what? The high of the most recent sell climax. So the high of the most recent sell climax in a situation like this, always the first target. You can see the first target here was the bottom of those recent buy climax. So that's pretty common in trading ranges and in trends. 46, an inside bar. Bulls might be willing to exit below it, so that's why, again, they bought the close and we got a giant bull bar 47, except traders use this bar to scalp out, not to buy more. So disappointment 48. Bear bar closing near its low, it's a low 2. We might have to get 2 legs sideways down. Bad follow through 49, so a lot of traders just using 49 to exit, and that's what's causing the bounce on 50. The problem with 50 is it's a third push up, so 1, 2, 3. And 48 was a good looking low 2, so we might have to get a second leg sideways to down. So it might not be as good as it could be. It might still be a credible always in entry, but probably not amazing. Low 2, 51, but this is a tight bull channel. We're getting really strong bull closes, so I would only pretty much be looking to buy. We're also low in a trading range. Big bar 52, but I think just bulls exiting. Bear's probably not going to sell. And then a surprise bar up 53. It's a high 2. So we got essentially the low 2, and then we got 2 legs sideways to down, and then a high 2. So I think an okay buy above 53. Good follow through 54, but potentially a wedge 45, 48, 54. So let's see the follow through. And sure enough, we get bad follow through 55 after touching the open of the day, and bulls just exit below 55, and that's what's causing 56. So we have a wedge 45, 48, 55, which means what? 2 legs sideways to down. So your first leg starts here, 56, 57, and then you start to get a pullback 58, but you're not buying 58. It's a high 1. We probably need a second leg down, and that's after 3 straight bear bars. So really not a good buy above 58. 59, bear bar closing near its low. It's double top, but tight trading range 57, 58, 59. So probably going to get bad follow through, and it could be a second leg trap. And you can see that's what it ended up being, and a bull bar closing near its high on 60. A credible swing buy, I think. Kind of bad follow through to 61, big tail, but bulls end up buying the close of 61, and they get good follow through 62. Okay to buy the close, buy the market 62. They want to see a successful breakout. And 63, a bull bar, but not quite able to close on its high, and a lot of traders are just disappointed and exit at the market. I think it's unusual to get a bear bar that's this big, but sometimes you definitely get a disappointment bar here. Bulls were holding on, hoping we were going to get a bull bar closing near its high. Try to break back out to the upside here. The midpoint of the week was up here for the bulls, so they wanted to get a close all the way up here above the midpoint. The midpoint of the week was actually 1 tick above the 16 high, so that was a target for the bulls. They wanted to get all the way back up here and get to above that midpoint of the week. Instead, the open of the week was actually it was in here somewhere. We ended up having a bull close on the week, but at the end of the day, you're right around the open of the day. This is kind of the point I was actually about to get to. So when you get 64 closing near its low, obviously not what the bulls wanted to see. 65, a second chance for the bulls, but probably really not all that good. It's a high 1, but I think if we were going to go, we probably would have already done it. So probably not going to get that much follow through. And the bulls who got the close of 63 are obviously disappointed in 64. They may scale in, but they're going to use this chance to get out. And that's exactly what happened on 66. An outside up bar 67, maybe one more breath, one last gasp of air for the bulls, basically their argument that we're going to rally all the way up. But the top of a channel, and this is turning more into, down here, I was ready, you're willing to buy and take a chance the bulls are going to do something. but they failed now. So now you're in a situation where you're sitting there more thinking, well, the bulls need to prove themselves more than anything else. Here, you're really it's a lower probability buy, but you've got a lot of good bull closes, and all closing near their highs. So we might try to get a good rally. But once you get disappointment, you start to get into a prove it scenario, which is exactly why we don't end up trading above 60, 66. Basically, it's just a disappointment bar, or 67. Bears sell the close of it, and bulls not willing to buy. We get an outside bar. It's basically 67, 68 outside pattern, but really just a trading range pattern right on the moving average, decently tight bull channel up. You're right around the open of the day and the open of the week, and you're in a trading range in the last 15 bars. So really, once you see 68, I would just be done for the day. The bull bar 69, but the bulls have had too many chances. We're probably not going any really much higher at all. Disappointment 70, 2 legs, and we just started to basically go sideways. Again, the open of the week was like right here, and the open of the day was here. So we had a ton of magnets here, a lot of reasons to stay sideways. So, I don't think you should. I think once you see 68, just turn off the computer and walk away for the day. Stop orders, 7 was a good stop order. You got to get up below 17. You can probably sell 17. It's just kind of hard to do considering, all the factors. I suppose sell the close 21, 22, sell 25. So close 27, 28, 31, 32, 33, maybe 39, but I think 41 is really just too low. You can buy above 44 for sure, but you probably get up below 48. Maybe you buy above 50, but probably not that great. I think 53 is much better. Maybe you add above 54, but ultimately disappointing 55, and then buy above 60. And that's probably the last good trade on the day. You can get out, again, it depends. You can get out a point or two below 63, or if you held and you were going to get out below 64 and didn't trigger, you can get out as 66 tests back up to the 63 close. Or if you really just sat and held, you get out below 68, and then probably be done for the day. On the weekly chart, we did get a bull close. But, if you're a bull, are you super ecstatic about this bull close? Not really. It's just a really probably week was bear close too, but it's you're glad it's a bull close. If it's a bear close, it's a better sell signal. But this really is nothing to write home about for the bulls, and it's a breakout attempt above the top of this channel. So really not all that good for the bulls. I think probably buyers below, but we could get a pretty deep pullback. We're pretty far from the moving average, so we could get a violent. The further away we get from the moving average, probably the more violent the move back to the moving average is going to be. Trying to think of like an example. We got pretty far away here, and you can see you get a big bear bar closing near its low, pretty far away here, big bull bar closing near its high. So my point being, the pullback could be relatively violent once it starts, but this has obviously been a very tight bull channel. The daily chart, just a doji bar essentially. I mentioned probably trading range day, and Monday will probably be a trading range day too. I would imagine there are sellers above this and buyers below. So really expecting trading range price action next week. And yeah, that's the day.